So today on the Accounting for Our Community podcast, we have Brent Souza, Senior Manager of SB Partners. And Brent is going to talk to us today about tax credits and deductions. We are in tax season. This is a very important topic and important information for everyone to ensure that they're maximizing on the credits that are currently available. So, Brent, maybe you can kind of jump into what's happening and what's new in 2022. Working from home, I know over the last couple of years, because of the pandemic, there was the working from home deduction. Is that still available?
Yeah, so that was introduced in 2020 during COVID, like you said. So that was extended to 2021 and 2022. So you can still use the simplified method, which is $2 a day up to $500. And that's the easiest approach because it doesn't require any receipts.
Okay.
Also, in order to be able to claim that, you just have to work from home more than 50% of the time for at least 4 consecutive weeks.
Okay.
And the key thing is that you're not required to work from home. If you choose to work from home, you can still claim that deduction.
Oh, okay.
Yeah.
So if your office provides like a hybrid method, but you still work 50% from home,
Yep.
you're
you
eligible.
can still claim that $2 per day.
Oh,
Sure.
that's
Yeah.
awesome. Now, working environments have shifted. People, weren't as traveling as much, and so I know that there was a new credit that was introduced as well.
Yeah, so the Ontario Staycation Tax Credit, so that was introduced for 2022, and that was to encourage everyone living in Ontario to travel within the province during COVID. So you can claim up to 20% up to $1,000 for an individual, so that's $200, or up to $2,000 per family, so that you can get back potentially $400. So that, and for a family, only one person can claim it per family.
Okay.
Yeah. So those expenses, it has to be for a short-term accommodation.
Mm-hmm.
So things like, so short-term, it would be like less than a month.
Okay.
And types of expenses would be like for hotels, motels, a rental vacation property, a cottage, a bed and breakfast establishment, things like that.
Would an Airbnb count?
It would count, yeah. Another thing is that it needs to be for leisure, so it cannot be a business trip.
Okay.
And the vendor must be registered for GST or HST.
Okay.
So if the CRA audits you and you have to provide the receipts, the receipt needs to have their HST number on it.
Okay. Are there any other new Ontario tax credits or deductions?
Yeah, there's actually one additional Ontario tax credit. So it's called the Ontario Seniors Care at Home Tax Credit. The name sounds a little bit confusing, but essentially what it is that if you're a senior over 70 years old, you get 25% of up to $6,000 of your medical expenses. So it's kind of a win-win because you get to claim the medical expense tax credit, and then you get an additional Ontario credit of 25% up to $6,000.
Oh, wow.
And that's refundable to you. So
That's great.
yeah, so that's amazing.
So refundable versus non-refundable, what does that mean?
So yeah, typically you hear non-refundable and refundable. So non-refundable tax credit, essentially what it does, it decreases your overall tax payable, but it doesn't result in like a tax refund to you.
Okay.
Whereas refundable, it does both. So it reduces your tax liability,
Okay.
and so reduces the amount you may need to pay for taxes,
Mm-hmm.
and also results in a tax refund to you.
Okay.
Yeah.
Oh, that's good to know. What else, like maybe federally, are there any sort of tax credits or deductions that we should be aware of right
So
now?
there is another deduction, a new deduction for 2022, and that's called the Labor Mobility Tax Deduction for tradespeople. So that's a deduction of up to $4,000 per year for certain travel and relocation expenses for people in the construction industries that are, traveling away from their home for work.
Okay.
So eligible expenses include, temporary lodging, transportation, and meals.
Mm-hmm.
The key here is that you need to be required to be away from your ordinary residence for at least 36 hours.
Okay.
And you have to be, the temporary lodging that you're staying at has to be at least 150 kilometers closer to the temporary work location than your ordinary home.
Okay.
So those are the criteria to be able to claim that deduction.
Are there any changes to existing credits?
Yeah, so for the disability tax credit, if you have type 1 diabetes, you're now deemed to meet the requirements to claim the disability tax credit. There is a form that you need to fill out and have your doctor fill out as well and sign off on it. It's called a T2202. They also expanded some of the criteria for the mental functions impairment and life-sustaining therapy. So more people may be eligible to claim the disability tax credit. So I would just consult your doctor on that.
Okay, great. Now, speaking on this topic, are there any other medical expenses or tax credits related?
So, yeah, for the medical tax credit, so they did include some additional expenses that would fall under the medical expense tax credit. So that includes costs related to fertility treatments and surrogacy are now eligible. Wow. So which is good because those can be pretty expensive. So to be able to get a credit for that is amazing.
Yeah, that's amazing. So shifting gears a little bit, the real estate market has been crazy over the past few years. Yeah. Has the government introduced any sort of tax credits to support new home buyers?
So there is a first-time home buyers credit. That's been around for a long time. However, this year they actually doubled the credit. Oh. So before it used to be $750. It's a non-refundable credit, and they increased it to $1,500. Wow. And what people forget is that if you haven't owned a home in the past 4 years and then you purchase a home, then you may qualify for the first-time home buyer's credit.
Okay, yeah, that's important. Speaking to real estate and home improvements, are there any other tax credits available for people that make improvements to their homes?
Yeah, there is, not just for improvements, but it's to make your home more accessible. Okay. And these are for people that qualify for the disability tax credit or are the age of 65 years or older. So you're able to claim up to, they actually doubled the credit this year in 2022. So before you're able to claim up to $10,000, and this year you're able to claim up to $20,000. It's a non-refundable credit, so the maximum credit you can get is $3,000 if you claim up to $20,000. Okay. So examples of this would be like, a wheelchair ramp, grab bars, a stair lift to help yourself get upstairs, and just renovations to make your house more accessible and to make yourself to be more mobile in your home, basically.
So shifting gears again, for business owners, are there any sort of tax credits available to them?
Yeah, so if you own a business and you purchase like capital expenditures such as, equipment, furniture, vehicles, historically you're able to take a tax deduction over time, like a certain percentage each year because they're capital assets. You can't take a full write-off. However, starting in 2022, if you purchase these assets, you're able to take 100% write-off in the year of acquisition. So it has to be a new asset, so it can't be something that's used before. And this is great because you're able to claim all 100% of it in the year you acquired it, which is going to help reduce your taxable income.
That's great. So just for clarification, if I'm a business owner and I purchase a used car, this wouldn't?
No.
Okay.
It has to be new.
Has to be new.
Yeah.
Okay, good to know. So there's lots of tax deductions and credits available, lots of updates. Thank you for sharing those. What would you say are the key takeaways for 2022 tax season?
Yeah, so tax season can be quite daunting and it's a lot of information. Yes. So it's best if you're organized and you don't wait till the last minute to submit your tax papers to your accountant. So we do have a comprehensive checklist on our website that walks you through all the available deductions and tax credits. So use that as a reference tool, and if you have any questions, contact your accountant.
That's great. Well, thank you so much, Brent, for joining us and speaking to the tax credits and deductions for 2022.
No problem. Thank you for having me here.